Welcome to the March 11th, 2025 episode of the Energy Show. I'm energy journalist Markham Hislop, and the working title of today's show is How OPEC Ate Danielle Smith's Brains. Now, I'm not the greatest headline writer in the world, and I chose this one. It's a little bit provocative, but on the other hand, I think it really accurately reflects the argument I want to make today. So if you want to understand how Danielle Smith thinks about the future of oil, how the Alberta oil and gas industry thinks about it, the business community, the oil and gas supporters, much of Alberta, you need to watch this show and watch it right to the end because I'm going to explain it from soup to nuts. And at the end of it, 30 minutes, you will understand. So let's start with CERA Week in Houston. This is a big energy conference. It's organized by S&P Global. And Danielle Smith is down there. And she spoke at least one presentation, like a fireside chat kind of thing. And she's down there, she said. She put out a press release last week. I want to read one line to you. She said, "At CERA Week, I will be making it clear that Alberta is a critical partner in securing energy dominance for North America." Now, who uses the phrase energy dominance? Well, U.S. President Donald Trump. So Smith, in addition to not really being a reluctant member of Team Canada in the response to Trump's energy and general 25% tariffs on the Canadian economy, still that's her primary focus, it would appear. Now, what she's been wanting to do is, she's said this many times, she's put out a press release, she's said it in the media, she said, "I want to double Alberta's oil production." Okay, so Alberta currently produces 4 million barrels of oil a day. About 3.2, 3.3, somewhere in there is ultra heavy sour crude from the Alberta oil sands, bitumen, and the rest is conventional. And so she wants to double that to 8. Now, already Canada at 5 million barrels a day is the fourth largest producer in the world. Then you get Saudi Arabia and Russia up at around 9.2, somewhere in there. And you've got the United States at 13.2, which is the leading exporter. So if Alberta was able to double its oil production to 8, that would put it just under Russia and Saudi Arabia. Now, imagine what that would do for Alberta. I mean, generally Canada, but imagine what it would do for Alberta. Probably double the oil and gas revenues, which are, I think, around $24 billion last year. Maybe that was 22, but they're in that range. So now you're suddenly looking at what, $50 billion? Wow. How much clout would it give Alberta within Canada? It would significantly increase political clout. It would increase the population, might overtake Quebec's to become the second largest. There's a lot of, from her point of view, expanding the oil and gas industry is a huge win for Alberta. Now, why in the world would she think that? I mean, we're in an energy transition. The International Energy Agency just said not that long ago that the age of oil is dead. The age of electricity is beginning. The idea of doubling Alberta's oil production seems kind of nonsensical. Okay, I'm going to explain it for you. But first of all, I have to tell you a story. So back in September of 2023, Calgary was the host to the World Petroleum Congress. And it was a 3-day event. I covered it, was there for all 3 days, and it was a big deal. Okay, so Saudi Arabia was there. Both had separate pavilions. All kinds of, heavy hitters in the oil and gas industry showed up. They had a plenum, not a plenum, but anyway, a big, event on the first evening. Amin Nasser, the CEO of Saudi Aramco, was there, and the CEO of ExxonMobil was there. An executive from Sinopec, the huge Chinese refiner, was there. I mean, it was a big deal. And one of the things that really stood out for me, it was probably the thing I took away most from that event, was the emergence of the oil and gas forever narrative. It absolutely dominated conversation at this event. And basically what it said is that there is going to be, between now and 2050, oil isn't going to peak in 2030. Oil is going to grow out to 2050 And it's going and driven by petrochemical demand, rise of the global south, and so on. We'll get into that in a little bit more detail in a bit. And this is the golden age of oil, not the death of oil, the golden age of oil. And there was a lot of criticism of the International Energy Agency as a politically active. They're political activists, not economists. And this is hilarious. At one point, Danielle Smith was going on and on about, and she was echoing the Saudi energy minister, right? She was kind of quoting him and saying that, now these silly computer modeling things, you can't trust them. They never get anything right. Well, every year, OPEC puts out its World Oil Outlook, which is based on computer modeling. I mean, everybody does this. The IEA, and there's all kinds of other agencies and firms, consulting firms that do this. So she's criticizing the IEA for something that OPEC does and that she quotes all the time. So, I mean, there's ironies abound here, right? Okay, so they modeled this global golden age of oil. And I want to go through this, what the assumptions are, what the conclusions are of this. And so in October of 2023, just after the Congress ended, OPEC released World Oil Outlook 2023, World Oil Outlook 2045, which had extensive detailed modeling out to 2045. And then the next year, they updated it and called it World Oil Outlook 2050, and it's on the web. You can Google it and find it on OPEC's website. In the 2045 version, they said that oil demand was going to increase 14 million barrels a day, and then in 2050, they said it was going to increase from 103 million barrels a day, where it is now, to 120 million barrels a day by 2050. And that's exactly, if you're looking at that from Danielle Smith's point of view, and you're saying, if there's going to be 17 million more barrels a day of demand, why can't Alberta have some of that? Because Alberta, the New Oil Sands is one of the few basins that actually could expand. And contrary to, public opinion, public myth, actually, the oil sands, once the upfront capital is paid off, is very low cost and a very low decline rate over like 20, 30 years or so. So it is definitely, most of it is competitive. Here's the problem. If you want to double oil production, you got to get it to market, because Alberta is not on a coast. So how many pipelines would it take to transport 4 million barrels a day? Well, Trans Mountain expansion was 525,000 barrels. So 8 or 9, maybe 10 Trans Mountain expansions, because remember, you got to dilute the bitumen 30% with light hydrocarbons, so you don't get you get 500,000 barrels of pipeline. You only get 70% of that capacity. So lots and lots of pipeline. Could you imagine 10 pipeline projects? Trying to get to the West Coast or trying to get to the East Coast. I mean, the mind boggles. And part of that problem is that if we have to build all those pipelines or pipeline capacity to do this 4 million barrels a day, is taxpayers' money would almost certainly be involved. And the economists that I've talked to range from some public capital in order to de-risk the private sector, because Canada is considered a high-risk market for oil and gas linear infrastructure, it's called, like a pipeline, all the way up to the only way this will work is if it's a crown corporation and the federal government owns all the pipelines. That's crazy. TMX was $34 billion. How many hundreds of billions of dollars would when you game out Smith's ambitions, Canadian taxpayers are going to have to shell out a lot of money to make that happen. So listen up. This affects you and your pocketbook. Okay. So the next thing I want to do is give you a quote from Amin Nasser, the CEO of Saudi Aramco. This is what he said at CERAWeek. It was quoted in a story from Bloomberg this morning. He said, as the fictions of the promised transition finally washes away, there is an historic opportunity to change course. Now, this is going to come up. This is going to be more important when we get into the discussion of the OPEC modeling in world oil, these two world oil outlook reports. The Saudis, OPEC members generally, believe that the energy transition is driven primarily by policy, and that would be mostly climate policy. And they think that the world now, especially with the election of Donald Trump in the U.S., is pivoting away from that. People don't want to spend the extra money, like they don't want to pay higher taxes for things like subsidizing electric vehicles or wind and solar, that sort of thing. So one of the things that I've learned in reading a lot of modeling, which I do, is something Dr. Chris Bataille, who's an energy economist, told me. He said all good modelers state their assumptions up front. And so the World Oil Outlook modelers did that very thing. So let's talk about some of the assumptions. Clean energy technology will always be uncompetitive, at least out to mid-century. That means that you're never going to see electric vehicles at price parity. You're never going to see uh, you're never going to see wind and solar cheaper than gas or coal, that sort of thing. The second thing is, and I mentioned this, policy always drives adoption of clean energy technologies, and governments, it's getting expensive. So there's two things. Oil demand will fall in the rich global north, but rise in the global south. Now, you hear this all the time in the emerging economies. We're going to add a couple billion people by mid-century, and the emerging economies want middle class. They want a lifestyle just like North America or Europe. So they want cars and they want houses and they want things. So there are three assumptions in these reporting. There are lots more, but three that I want to explain today and why I think they're weak and why I think when you look at the trends, when you look at the data, when you look at the evidence, you'll see that the OPEC modeling doesn't hold up. Their assumptions don't hold up. Right? They're not about the math, it's about the assumptions behind the math. So the first one is the role of road transport in global oil demand. And remember, of those 103 million barrels a day, road transport accounts for 45% of the demand. So not just cars and trucks, but buses and trains and two-wheelers and three-wheelers are huge in Asia. Medium-duty trucks, long-haul trucks, all of that counts as road transport. So one of the things that they assume is that the current global stock in the inventory of vehicles will rise from 1.6 billion today to 2.9 billion by 2050. That's huge. I mean, that's a very large increase. But more importantly, they think that 75% of that 2.9 billion will be internal combustion engine cars. So it's about 2.2 billion vehicles, and only 25% will be electric vehicles. So that's about 700 million. Well, I went and checked the latest Bloomberg NEF forecast. And the reason I do that is because Colin McCarricker, good Canadian boy grew up not far from where I am on Vancouver Island, and he runs the Bloomberg NEF's um, head of clean transportation. So I've interviewed him many times about these numbers, and I trust his methodology. That's more than anything. And so they're estimating that the global inventory will get to 700 million EVs by 2040. So 10 years earlier than what OPEC thinks. And so that extra 10 years, how many EVs are they likely to add? 500, 600 million? A lot. And it won't be 2.9, but whatever number there will be a lot fewer combustion engine vehicles on the road than OPEC estimates. Um, so that's assumption number one. And assumption number two is China. Now, look, there are two issues here with China, and this is where the OPEC modeling really falls down, in my opinion. The first one is China's oil demand. So, World Oil Outlook 2045 estimated that China would see 4 million barrels a day of demand growth out to 2045. This 2050 said 2.5 million barrels a day. So they lowered it a little bit. Why is that important? Because Chinese sources have been saying that there's going to be peak oil demand either in 2025, 2026, probably maybe later 2027. And there's a lot of speculation that it's peaked already, peaked last year. And how, if, and there's two reasons for that. One is the rapid growth of electrification. Last year, about 42% of all vehicles sold in China were electric. This year, it's expected to be 57%. On their long haul trucking, this is really important because there aren't as many vehicles, but they travel a lot of kilometers and they burn diesel. And what China has been doing is switching them out to liquefied petroleum gas. So it's still a hydrocarbon, but it's a gas, not oil. And that has had a big impact on Chinese demand. And also the Chinese economy has softened. They've got a big real estate problem there. They've overbuilt. And so the economy is a little shakier than it normally is, and that's softened demand, consumer demand. So all of those things, they missed, it's been signaling for a couple of years now that demand is going to peak very soon. The OPEC, they knew enough to lower it to 2.5 million. Why didn't they lower it to zero? Because clearly that's where it's going to be, and it's going to be there a lot sooner than OPEC thinks. So that's a big problem. Now, the second thing is it is abundantly clear that China is now driving the energy transition. And last year, they had the third plenum, which is every 5 years they get together, and the Chinese Communist Party and the officials and so on, and they decide economic strategy. So part of China's geopolitical ambitions is to at least equal, if not rise above, the United States. And so they see that their plan is to do that in the back of their economic strength, and that means industrial strength, manufacturing strength. And we know now, we just had the startling figure come out a couple of weeks ago, China accounts for 45% of all manufacturing in the world. I mean, that's astonishing. So they want to continue that, but they want to go up the value chain. They want to get into advanced manufacturing. So they have this little thing they call three things, right? That they're going to really focus on. Government policy is going to focus. What are they? Solar, EVs, and batteries. Two of those things are directly related to transportation and oil demand. And the other thing you need to know is that China's government industrial policy is basically responsible for the rise of the Chinese EV manufacturing industry, batteries, and starting about 15, 17 years ago. And they're going to continue with that. And what they've done is they had 700 EV makers, if you can believe it. Now that lately they were down to, I think the last year they were down to 100, and they want to get down to 12. And so what they do is they subsidize everybody, and then they put them in this, they fight amongst themselves and they compete viciously, and they drive down prices and they scale up manufacturing, and only the strong and the really smart and hardworking survive. But you've got all this unused capacity. Like literally in the EV industry, only 38% of the manufacturing capacity was actually used. So China, and this applies to other manufacturing, clean energy manufacturing as well, just a tremendous amount of this unused capacity that you can put into gear, and you can quickly increase the output if you're going to be exporting, for example. So what did, China's finally got their EVs down at parity or below gas cars. And that's why they're climbing so rapidly in China. And the threat of exporting EVs into the United States led Joe Biden back in May of last year to put 100% tariffs on Chinese EVs. And then Canada took a little while to consult, and then September said, yeah, we're going to do 100% EVs as well. So, okay. Now, Canada and the United States, the two biggest car markets in North America, they're at 100% EVs. Basically, it's a wall. Keeps China out. Europe, which has already been importing a lot of Chinese EVs, raised some tariffs very selectively, different rates for different manufacturers. So they slowed it, but they haven't stopped it. Now, by closing or partly closing all of those markets, what did it force China to do? It pivoted over to the global south, the very region that OPEC is looking to grow internal combustion engine consumption out to 2050. Now all of a sudden China is saying, okay, well, we're going to export electric vehicles there, and we're going to have some of our companies like BYD, which is the big battery manufacturer, second biggest, and the largest car manufacturer in and EV manufacturer in China. They're building factories as fast as they can get them up. They've got one in Brazil and Turkey and Vietnam and Thailand and all over the place. And that's part of government strategy. They said, look, you've got to localize production. It's not enough to just export. You've got to build a factory. At the very minimum, you assemble parts. So like you take a car and you break an EV and you break it down into pieces, put it in a box, a big crate or crates, and then it gets reassembled over in wherever the factory is. And on top of that, the Chinese government is spending billions and billions and billions of dollars on infrastructure. Like they just opened up, there was a $5.5 billion port in Peru that opened up, and China had put $1.5 billion into it. Well, why did they do that? So they can import batteries and solar panels and electric vehicles and then ship them all over Latin America. I mean, there's a strategy involved here. And all we've done in North America by erecting these walls to protect our domestic manufacturers is just send the Chinese over to the very markets that, we were counting on for growth in oil demand. So discounting the fact that China is driving the energy transition and underestimating the speed at which peak oil demand will arrive in China is a major, major modeling assumption failure from my point of view. And then, of course, we've talked about the global south already, and that's a big issue. So China's the growth that was intended or anticipated in the global south is, in my I would guess that Asia, which is China's backyard, is already sort of pivoting to electric transportation. You see a lot in like Vietnam, for example, has got its own EV manufacturer now, VinFast, and you've got countries like Indonesia that are positioning themselves to be big players in the EV battery field, and they hope to leverage that into an EV manufacturing industry, on and on. So Asia is already going in that direction. I already mentioned Latin America, where China, I mean, that's the United States' backyard. They've been protecting that since World War II, and China is targeted Latin America. And so global South is not going to be the panacea that OPEC thinks it is. Major modeling assumption failure from my point of view. Okay, so we've got three modeling assumptions here. The role of road transport in demand, we've got China, and we've got the global South, where I think OPEC has made their assumptions just don't pan out. The evidence doesn't support their conclusions. So, who is likely to be correct? Is it going to be OPEC, or is it going to be the IEA, and this gets back to the press conference that Danielle Smith had at the World Petroleum Congress, which I went to, and I asked a couple of questions. And, I basically asked her, so what if OPEC's view of these things doesn't pan out, right? Like, you ridicule the IEA, but on the other hand, there's Bloomberg and Rystad and S&P Global, and there's probably 8 or 10 other agencies that more or less agree. Their modeling's a little different and grist for another show, but basically fundamentally agree with the IEA. We're going to see peak demand in 2030, and she just waved it off. And I asked her, is there a plan B? Like, if you're wrong, is there a plan? No, there's no plan B. And she and her government are like steaming ahead to that OPEC golden age of oil, and that's what drives her government. And so when she fights with the federal government over any kind of like emissions cap or electricity regulations, whatever, it's all about not hindering the oil and gas industry, and to some extent the power sector in Alberta. And when she calls for more pipelines, it's because she really believes there's going to be, 17 million barrels a day of new demand out to 2050, and she needs a bunch of pipelines to get that oil out to market. And she wants it to be in Asia, primarily in Asia, and not to be in the United States, where it's the only customer at this point. So my point here is, if you don't understand what the way OPEC views the world, then you don't understand how Danielle Smith understands the world, and the things that are driving her policies, and the things that are driving her PR strategy, her political strategies, and the things that are driving the industry itself, the CEOs. I mean, they're very fond of saying that when looking at the energy future, diversification, not displacement, by meaning which all things are going to grow so much as per OPEC that any new energy sources like wind and solar and hydro and nuclear, whatever it might be, are only going to be added to, and they'll be absorbed by the growth, and they won't displace any oil or gas at all, maybe not even coal from the industry's point of view. Diversification, not displacement. You hear that all the time in Alberta. That's a problem because as we progress towards, the end of the decade here, where the IEA expects to see peak oil demand, it's looking less and less likely that the OPEC vision is going to be coming true. Now, in the future, I will explain Energy Media's energy transition theory of change, because we're plugged into a bigger debate at the global level. And you see it like in the US. I interview experts all the time who are plugged into this debate. Certainly, lots of them in Europe and many of them in Asia as well. It's based on technology change, clean energy technology change, becoming competitive, and then beginning to disrupt industries and business models, which in the traditional industries like automakers and oil and gas producers. And that analytical framework, if you will, is almost completely unknown in Canada. It's the OPEC vision of where the future is going that is far and away dominant. And it's even dominant at the federal government. I know Danielle Smith likes to say they hate oil and gas. They don't hate oil and gas. They just want it to stop emitting so they can meet their climate targets. Anyway, thank you very much for this, and we'll be, please give us a call. No, give us a call. Email us at the Energy Show, ENERGI show @gmail.com. We've been getting a lot of your comments and really appreciate it, and we will see you tomorrow.
Thanks for watching the show. We are on a mission to reach 10,000 subscribers and over 1 million views. If you're enjoying the content, give us a thumbs up, share your thoughts in the comments, and subscribe to our channel. Thanks for being part of our community.